Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the Hormuz Strait is effectively shut again, with Iran's strategy winning against the US's firepower. It is hard to think of any other politician trashing their advantage perception so completely. There will be long historical echoes from all of this ineffective breastbeating. But elsewhere and locally, this week will bring updates to our migration and travel data, indicators of June retail activity, and early signs of June inflation. We'll also get a look at business sentiment and likely get the June REINZ update. In Australia, they'll chime in with their June labour market updates after updates for consumer and business sentiment. In the US, apart from Trump's wars, investors will turn their attention to the second quarter earnings season and a steady stream of important economic data that includes their CPI, retail sales, and consumer sentiment updates. Fed boss Walsh will be briefing Congress, and that'll be interesting too, especially about his views on reform. And Canada will be reviewing their central bank's policy rate this week, although no change from the 2.25% is anticipated. In Japan, it'll be about machinery orders and industrial production with eyes firmly focused on their currency, which will also impact their fast-rising interest rates. In China, it will also be a busy week of June economic data releases, including for trade and debt, and highlighted by their second quarter 2026 GDP growth rate. Over the weekend, in a fiercely competitive Chinese car market, they reported 2.8 million vehicle sales in June, which was somewhat unexpected because a dip from May was anticipated. But this is a 3% dip from a year ago. That pushes their 12-month sales to 33.8 million units, up from 33 million in the prior equivalent year. Car exports, though, rose above 1 million units in June, the first time that level has been achieved as it floods global markets. It is storm season in China again, and severe flooding has hit a number of regions, enough to concentrate mines in Beijing. And elsewhere, China has banned the export of helium, actually the re-export of helium, because they get most of it from Russia. The Middle East conflict has restricted supply from there, and tech users in Europe and Asia are now in a tough spot, as are medical users everywhere. China is conserving its Russian imports for its own tech industry. And Japan is reporting that their producer prices rose 7.1% in June from a year ago, accelerating from an upwardly revised 6.6% increase in May, and above market forecasts of a 6.8% gain. It is the fastest annual increase since March 2023. Higher energy prices following supply chain disruptions linked to the war in Iran are driving this, of course. And Japan's finance minister said they want to steer their state pension funds to, quote, sustainably increase investments in domestic assets. This brought a sharp, immediate reaction in both their currency and bond markets due to the expected size of the shift. The yen gained, or at least it halted its fall, and their bond yields fell sharply. Elsewhere in the US, initial jobless claims rose by 224,000, and about what seasonal factors can account for. There are now 1.76 million people on these benefits, less than a year ago. After a good May rebound, existing home sales in the US fell back to average levels and to levels lower than a year ago. The median price is only up 1.8% from a year ago. That modest rise is less than income growth, so overall affordability is getting a chance to recover there. On Wall Street, South Korean computer chip maker SK Hynix has raised $26.5 billion in its New York IPO, the largest ever listing by a foreign firm in the US. SK Hynix is a key supplier to AI chip giant NVIDIA. In Canada, their payrolls rose a minor 18,200 in June, slightly better than the expected 10,000 though, and holding on to the 88,000 gain in May. The June gain was all about a strong rise in the private sector, up 32,000, which consolidated the good May private sector rise of 56,000. But most of the net June gain was from part-time employment. These positive shifts in June have something to do with hiring for the Football World Cup events there. Global container freight rates rose another 2% last week to be 74% higher than year-ago levels, mostly about outbound freight rates from China to the US where demand is still high. Bulk cargo freight rates pushed higher too. The US Treasury 10-year yield is now just on 4.56%, unchanged from this time Saturday, but up 7 basis points for the week. And the price of gold has risen to $4,119 an ounce, up $19 from Saturday, but down $55 from a week ago. Silver is now just under $60 an ounce, up 50 cents from Saturday, down $2.50 from a week ago. And oil prices little change from Saturday, just on $71.50 a barrel in the US, while the international Brent price is just on $76 a barrel. A week ago, these prices were $68.50 and $72 a barrel, respectively. Hormuz transits have dived sharply as the hot conflict explodes again and Iran declaring the strait closed. There have been just 12 crude or product tankers exiting over the past 24 hours, and 5 of those tied to Iran, and only 9 entering for new loads, again mostly Iran-linked. The Kiwi dollar is unchanged from Saturday at just on 57.6 US cents, up 50 basis points from a week ago. Against the Aussie, we're unchanged at 82.9 Australian cents. Against the euro, we're unchanged at 50.5 euro cents. That all means our trade-weighted index starts today at just on 61.5, which is the same as this time on Saturday, and up 60 basis points for the week. And the Bitcoin price starts today at $64,084, up 0.6% from Saturday, up 2.9% from a week ago. Volatility of the past 24 hours has been low, though, at just under plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Tuesday.